US lawmakers and both presidential candidates have raised questions about AT&T's deal to buy Time Warner. The US telecoms giant, already the country's third largest cable provider, is paying some $85.4 billion for the business, which owns CNN and HBO. For today, though, we're more concerned about how to trade each stock. Before we get on to that, let's turn to Josh and just find out a bit more about this deal, because clearly there is some initial opposition, perhaps mainly potentially for both companies to get together in their pure form.
Yeah, certainly. I think probably the most surprising thing about this is the timing, because certainly, you know, when we're looking at big companies joining into one, and it brings up the question of competitiveness within the industry. Of course, you don't necessarily want to stifle that. When you see big companies merging together, you would likely think that you're going to get sort of higher prices, because essentially the threat on this occasion is AT&T essentially now will hold all the ace cards and be able to say, well, actually, if you want to get this content, come to us. So they're likely to, if they're going to pass this one, they're likely to actually say that they're going to have that content available to all of the providers out there. But the interesting thing is, you know, we've been seeing Donald Trump already saying that he wouldn't let the deal go through. Coming just a month before this presidential election, it seems like a pretty poor timed deal, because of the fact that we're quite likely to see people essentially put their name against it as a sort of quick win to try and win the election. It's not necessarily something that people out there in terms of consumers are going to be necessarily feeling too good about this deal, but certainly in terms of the companies itself, it actually makes a lot of sense.
Let's take a look at the charts, because AT&T has all sessions on the IG platform and also Time Warner as well, waiting for the start there today. Potentially interesting deal. I mean, we saw some reaction later on Friday, didn't we, as to some of the movement ahead of this announcement?
Yep, certainly. And I mean, you can see with AT&T, this is not always the case, but often the case. When you see one big company buying another, it's the one being bought out generally that you'll see the price rise. And on this occasion, you know, compared to where the price was on Friday, is a 35% premium that's being attached to the Time Warner. Whereas for AT&T, we're seeing this deterioration. You can see it on a weekly chart here. We've got this gap lower, and this is a continuation of what we've been seeing recently anyway in terms of weakness. It comes about from this $43 mark, and I'll take it out to the monthly to show you that. So it's a really big historical level. It failed to break and it turned around. Doesn't necessarily mean that the trend is over, and I guess, you know, we've been talking about this idea that actually there's so many hurdles to get through, the deal might not necessarily actually happen. Nevertheless, we won't find out that immediately, and the markets are likely to run with it. But you can see we still remain within this large ascending triangle pattern, and as such, as we get into the sort of depths but don't surpass this $31, there's a good chance we could start to see this market turn higher once more. So really the line in the sand here is going to be this 31.14. If we break below that, we would have broken below trendline support as well, and it's not necessarily looking particularly great. Otherwise, if we were to find some sort of support around your 33s or 34s, it could easily take us back towards that $43 mark. Now, if we were going to look at Time Warner, like I said, you know, generally this is the flip side of the coin, so you'll see that big appreciation. Here we haven't necessarily seen that reflected because of the fact that we haven't seen this candle open. This is the monthly time frame, shows you that the key level it's been trying to break through is 91.33. Well, that is going to be broken through and some, because of the fact that this deal has been offered at a substantially higher price. So if we're looking at the daily time frame, we can see we're likely to jump higher at the open. We're probably going to fade that somewhat, but generally, you know, the question mark is, you know, is this deal going to happen? And therefore, if people think the deal is going to happen, then you're likely to see price remain around about that bid offer. If people start to think that the deal's not going to happen, then you're likely to see this move fail. So actually, it's likely to really track the sort of headlines in terms of whether this is likely to happen or not. The more people you see coming out, and certainly if we see Hillary Clinton come out and say that she wouldn't allow it happen, then that's likely to see this market fall quite substantially. We could see some decent downside.